We can see you. Hello, Money Connoisseur.
How you
Welcome.
doing, Renee?
Good. Hey, you guys. So, this is the first time I'm actually using this guest feature. So, bear with me, but this is a good time to actually use it. So, that's good. Vanta, what's good? Money Connoisseur, tell us your name and tell us what you do.
Okay, my name is David Slaughter. Everyone knows me as Money Connoisseur. Um, I do financial broker. So basically, I help people with life insurance. I help people with setting up wills, trust, retirement planning, creating 401ks if you don't already have one through your job, creating a pension-like system because most companies don't have pensions, right?
Hmm.
So that's pretty much what I do.
Okay.
Anything dealing with money.
I love that for us. So, I think one of the things that is important that we discuss, and I really wanted to talk about it today, is the fact that our community has not been educated on finances, particularly when it comes to wills and trusts and different things like that. Because I think, and excuse me, I forgot his PNB. His girlfriend was talking about how he didn't have a will. He didn't have
Right.
he didn't have any kind of life insurance. They have kids together, and we've talked about this a lot when we have discussions about the Black community. What that means if all of us took life insurance and wills more seriously, how that could possibly drive the crime between the police officers in our community down, because we need to keep the wealth in our community, and we can't do that when we're dying at younger ages, when we're not educated on our finances and being able to leave our family with a legacy that can help drive them forward in the future. So, can you just kind of discuss why, if people have not gotten life insurance or have looked at a will, tell us what's the best option, like what people should be striving to get and why it's important?
Okay. Yeah. Um. First, we got to understand, like you said, with the police brutality and everything going on, how life insurance could possibly save us from some of that, right? And also just regular crime. Like we have to get to the root cause. Why is there crime? Why are people breaking in cars? Why are people, going in people's houses stealing? Is a reason for that. It's not that we just need to get more police and these people are just doing crimes just to be doing it. A lot of people are in positions where they have families, kids that they can't feed. They just can't feed them. Like they're going for jobs. Jobs are paying, little to nothing. Here in Memphis where I am, I want someone to guess what our minimum wage is in Memphis. Memphis, Tennessee. Just guess. Anybody.
What's the minimum wage, y'all? Because I know out here it's like it's high, but that's just because the cost of living is high. But in Memphis, can you guys,
Just guess.
675? Persistence probably looked it up. Persistence, don't cheat. Cheat.
675. Close, but that's not it. The minimum wage in Memphis is $7.25.
Terry was close.
Yep, $7.25, and it's been $7.25 since 2009,
Mm.
and it hasn't changed because we're doing what the national level of minimum wage is instead of the state level. Which, if you look at that 7.25, what can a person afford with 7.25 an hour?
Not eggs.
Right, right, right. So those are the reasons why people are doing things like breaking in cars, stealing guns, doing this, doing that, because they don't know nothing else. They've tried all these different things and it's not working out. And then you have a lot of the younger kids. I've been seeing this on social media a lot where parents are videotaping their kids getting their first check, and the kids are like, "What's all this stuff coming out? What is this? I work this many hours. I get paid this. I don't understand what's going on. I'm getting robbed, you know? And you got to look at that. That's a prime example of what this generation is saying. This ain't going to work. I'm not with that. In my generation, which I'm a millennial, I think a lot of people on here are millennials. Um, we're kind of that force that's changing everything. Like, from what our parents did. We're not looking to work 40 years. We're not looking, we don't even have pensions to look forward to.
Mm-hmm.
And on top of that, maybe y'all know, maybe y'all don't know, but 2034, Social Security is over.
Yep.
So what would make me give a company 30 years or 40 years if I know I'm not going to get anything?
So tell
Well,
us
what?
so tell us why it's even more important then to look into life insurance, because I know that we've heard so many things about like universal life insurance and how we can use that. Waka Flocka has talked about it a lot, and
Uh-huh.
obviously having that life insurance as a backing to make sure that if anything happens to you, your family will be taken care of. So tell us a little bit about what the different types of life insurance, how they can be used, and again, why it's important to have it if, and I mean not if, I don't wish it on anybody, but if there is a case where you happen to pass before you're supposed to.
Right. So term life. You got a couple of different types of life insurance. Term life is for a term period. So you can get 10 years, 20 years, 25, 15, or 30 years. 30 years being the max. That's the max. 30 years. Yeah.
I'm
Hey, everybody get a pen and paper because note takers are history makers,
playing.
right?
I
Note
think I'm
takers are history
y'all
makers.
think I came to play around with y'all. Okay.
So the term life is the max time on it is 30 years. The minimum time is 10 years. What that means is if I go get a term policy for let's say $200,000, it's going to be cheap. Why? Because it's going to end. When it ends in that 30 years or that 20 years, you get nothing. You just had a cheap policy for a large amount of coverage where if you died in a car wreck, that would pay out. You know, then you have whole life. A lot of people get this mixed up. They get whole life and permanent life mixed up. Permanent life is it lasts for 121 years. You won't outlive it, right? That's what you want. Now, I'm not saying don't get term, but you should definitely have term and permanent. Now, whole life, it lasts for 100 years. Now, we got people living past 100, so that's the problem, right? So we need that permanent. We need something that we know we have no idea of anybody living to 121. So now with the term, all the stuff you hear Waka Flocka and all these other people talking about being your own bank, infinite banking, and all of that, you can't do that with term. Term gives you nothing but cheap coverage, which is good. Which is good because a lot of these rappers that we've been seeing pass lately, if they would have had a term, that family would have got paid out, and they probably would have had a large term because we did a study, me and the team the other day where we seen Big Scar. I don't know if y'all know about that guy who was rapping, who was with Gucci Mane. He passed away.
Yep.
Um, he was 22 years old. So $100,000 policy, term policy for him would have been $19 a month.
Mm.
So you mean to tell me people don't have $19 a month in their working jobs and doing all
Hear
that?
that, right? If you have $100,000 policy or even a $200,000 policy for a term of between 10 to 30 years, it's only going to cost you between 19 to what, $50 a month?
If 50, if
If
50,
50.
it all insurance depends on health and age.
Okay,
The
so
younger you are,
Planet says not mine is 90 a month. But how long is your policy? Is it term and how much is it?
and how old were you when you got it? Because that's a key thing. Age and health. Do you have any health conditions? Are you taking any medicines? That's going to make it cost more.
Mm. So
And
health,
it's always cheaper for
pre-existing health
women.
conditions does have an effect on how much you're going to be
Oh
paying.
yeah, definitely, definitely. That's why I preach and teach. Get it now. Get it while you're young, while you don't have any health conditions. Get it for your kids as soon as they're born. 2 weeks after a child is born, they can get a policy.
Does her age have something to do with it being high too? Because she's 25 years old and she has $100,000 policy.
Yes, age has something to do with it.
Okay.
The older you are, the more it's going to cost.
Okay.
Yep, the older
Y'all
you
got
are, the
that?
more it's going to.
So just to recap, because I want everybody to understand this. You have a term policy, you have a whole life policy, and you have a permanent life policy. Term
Yep,
policy is 10 to 30 years. A whole life is 100 years, but since we know we living past 100 years, we have a permanent life policy, which is a 120-year policy. And again, your age and your health will be calculated within your monthly payment. But even just a term policy for those of you who are like, I'm not making that much, I can't invest, Anything from $100,000 to $200,000 can cost you anywhere from 19 to 50 bucks. 25
The
year old
only the
dollars.
only other factor that's gonna play into that is the state that you live in.
Mm,
That's the only other thing, because you got certain states where car accidents are very, very high, right? So the insurance companies, when it comes to life insurance, they're looking at that. That's where they're getting their rates from. They're saying, okay, we might have the same person, like a woman, another woman in Tennessee, a woman in Las Vegas, same age, same health conditions, if any, but the prices are different. Why?
mm,
Because you live in
mm.
a place where there's a car wreck every 5 minutes,
Yep.
right? So
Fact.
you have a high risk. You consider high risk where you live.
Somebody asked, I'm 53. Is it too late for me?
No, the oldest you can be to get a life insurance policy is 85 years old.
Ooh.
Now, is it going to cost you more at 50? Of course it will. If you would have got it 30 years ago, that, like, if you get a permanent policy, the premium never changes. So if you get that policy, say like your child, 2 weeks old, right? You might get a $500,000 permanent policy that's going to last their whole life at 2 weeks old, right? That policy might only cost you, let's say, $60 at that age. When that child turns 50, they're still only going to be paying $60. But if they would have tried to get it at 50, oh, it's three times their price. See how you can set your kids up. You can set the your nieces, your nephews. You can set everybody up to not have to pay their arm and the leg that's going to cost them when they get 50, 60, 70 years old.
And this is just kind of going deeper down the rabbit hole. If in fact you do have your own business and you're able to put your children as employees under your business, that money could be fueling those life insurance policies.
Exactly. Now you're talking. Now you're talking. Now you get into the wealth part. You get into the wealth part.
Okay, just filling y'all in, and we'll talk about LLCs versus S corps, how you can do that in just a moment, because that's what I was going to ask next. But just kind of forecasting that. Um, think about that. We'll table that for a second. So, what obviously when someone passes away, just so that people know why you're paying into this policy, what is the money going to help being used for? Whether it's $100,000, $200,000, $1 million policy, if you or someone you know has either one of these policies and they pass away, what can that money do for you and the family? Because that's the most important part, right? When we talk about like
Right.
police brutality in the Black community, like how, like the fact that families don't have money to pass on to help those families continue
Right.
is such a big deal, because that's what's holding our community back in a lot of ways. We don't have the money, but if we invest in these policies, we could. So tell them why, what the money can do to help them.
Right. Okay. So a couple of things you said I'm going to touch on. So if you're thinking about a person, you're just trying to cover them for passing away, like they might be a little older and they might have health conditions. You wouldn't get none of those policies I just named. You would get that person a final expense, a burial policy, or it's called a final expense. You would get that. That means that you're going to get something like 20,000, 15,000. It's probably still going to be kind of high for that amount because of their health and their age. But that's something that's going to take care of the funeral automatically. Like you could pick out the caskets and everything. Like only thing you do if that person passes away is call the phone number and everything's done.
So you're saying if a person dies from like health related things and they
Or
have
if
a,
just, if you're just looking for something to pay for a funeral, you would get a final expense. You wouldn't go get permanent policy and all of that, right? That's for extra stuff. That's for, hey, pay the house off, pay the debt off, pay the cars off, and pay for the funeral, and put 100,000 in your pocket. That's what that's about.
okay.
So the biggest thing I tell anybody about life insurance when it pays out is tax free.
Mm,
It's one of the only things that you can get money in that amount of money and it be tax free. You pay no taxes.
love that for us.
So I don't understand why people are not getting it. Like
And because
you
the
pay.
it's the lack of education in our community, right? People don't realize how simple something is. People don't understand how are other people able to survive these things, pay for these things, flourish even after a death. They don't see the steps that go into it leading up to something unfortunate like that.
Right, right.
So,
So your terms are going to be for sudden stuff, right?
okay.
Like, and for the term things in your life. Like, if you have debt, do you plan on having debt your whole life? Do you plan on paying your mortgage on your house your whole life? Do you plan on paying a car note your whole life? So you get coverage based on your lifestyle and the way you live, right? So how does that look? So I do what you call layering policies for clients. So I look at their income as a household. I look at what kind of retirement plans do they have, if they have a retirement plan or if they don't have one, right? And I look at their income. So the way I'm going to give y'all some game. I'm going to give y'all exactly what I do, my personal policies and income and all that. So you want to get a term policy based on things that are term. So if you have a house and it's $200,000 house, you want to make sure you have $200,000 term policy, right? Now it doesn't have to just stop at 200,000. You can get all of your stuff under that one policy to cover. If I pass away, I know the house is paid off. I know the cars are paid off. I know y'all don't have to go live in a bad neighborhood that you can afford because I left y'all with nothing. All right. You want to get all of that term stuff, the debt, the house, all of that under the term policy. Now, I'm going to give y'all something y'all going to have to write down. There's another term policy that a lot of people don't know about, and it's called the ROP. ROP stands for Return of Premium. Now, what that means is the same scenario we used when we was talking about the term policy, the 10 to the 30 years, you get the same 30-year policy, term, $100,000, right? Whatever their policy is costing you every month, you get all of that back at the end of it. But it has to be the ROP policy. It can't be just a regular traditional term. So what does that look like? A person's paying a certain amount, and then 30 years come, here you're getting a $35,000, $60,000 check, tax free. That now you can pay off their car. Now you can pay the rest of your own the house if
Okay.
you still owe.
Okay. Hold on. This is gold. Okay. So you have a term policy, but you have
Traditional term.
ROP. That's a traditional term policy, but
The
then
regular one is
term
traditional.
policy. That's my policy for my brother. Look, she said, "Uh-oh." And you said, "Uh-oh, yeah, we getting into the thick of it right now." So you have a original, you have a term policy, and then you have an ROP, which is a return of premium. So
Mm-hmm.
let's say you have a term policy for $100,000, you're paying $20 a month or so.
Mm-hmm.
Policy for, we'll just cut it short for 20 years.
Mm-hmm.
After 20 years passes, all those $20 payments you were making every month comes back to you tax free
Tax free. Yeah.
while still holding up the original term agreement, correct?
That ROP, remember, it's term. It's still the same agreement, meaning it's over. But
Right.
you're gonna
So
get all
so
this
so
money.
in the event that something happens, you're still getting that $100,000 out of that
So
policy.
this how it goes. It's still just like the traditional term. It's still gonna end in that 20 years.
Okay.
It means you have no coverage with
Right.
that policy. But you're gonna receive the money with the ROP. Everything you put, it's like you saving money by being covered. Now you're still
Mm-hmm.
alive 20 years later. Cool. I shouldn't be penalized. I put my money in there. I'm still alive. Give me all my money back. I don't need it anymore. I'm still alive, right? That's why you have multiple policies though. Because what's the fight then? Well, I was 20 years old when I got the policy. It was super cheap. Now, here it is 20 years later. I'm 20 years older and I don't have this policy anymore and I didn't get another policy. Now I'm thinking about I have to get another policy,
Okay,
you know.
so what happens? So let's say you don't get the ROP and
Uh-huh.
20-year term. Once that 20 years ends, where you have $100,000 term for 20 years. Once that 20 years ends, then what?
Nothing. You don't have a policy. Your
Okay,
money's gone.
don't get 100,000.
Nope, you don't get 100,000. If
Don't.
you after those 20 years, 3 months later you die, there is no coverage.
Y'all hear that?
And a lot of people have that. A lot of people have those type of policies and don't understand what they have.
But see, with the premium, you get your money back at least.
With the ROP, you
With the
get your money back.
ROP, I don't know why I said
So
premium. My bad. With the ROP, because I heard return of premiums. That's why I keep saying premium. But with the ROP, you at least get the money that you invested into that policy back after.
yes, and that way you know you can afford another policy.
Y'all, game, game, game.
Yeah. That way you can know you can afford. So a lot of times, let's just look at it at a deeper thing. Just look at it on a big scale. Oh, hey, if I paid into a policy for 20 years and now the policy is over and it was an ROP, they're giving me a $50,000 check. I paid 50 grand over 20 years. Now I'm getting it all back. Hey, it's a business I've been wanting to start, and I only needed $20,000 to get it going. Bam, that's tax-free money. You don't have to go to a bank and borrow money and owe them twice what you borrowed.
Ooh.
You have your own money.
See,
You
now don't
you
we
got
all
your
wish
own
we had
bank.
policies when we were born, fresh out,
Whew.
fresh out. Could have been had 50,000 at 20 years old to start a business. Could have been had however many $1,000 to
Could have
start
had a 500,000. Easy.
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 Easy. Money connoisseur, can you give everyone your information for those who are asking? Angie is asking what your information is so that way people can contact
Okay.
you.
So on IG, you can find me at Money Connoisseur underscore, right? On Facebook, I have a page and I have a group. Everybody should join this group. I got a group called Group Economics, Black Wealth Group Economics. It's called Black Wealth Group Economics. That's a group I have on there where I give out this information and show people how to actually do it. Um,
And where's that group at?
that's on Facebook,
Okay.
Facebook groups.
Okay.
And I have a Money Comes to a business page on Facebook too, so y'all can find me on there. It has my office address, phone number, email, all of this stuff on there.
Oh yeah, because I might be giving you a call, brother.
I'm with it. I'm ready. This year,
Uh,
things have to change. Things have to change. I think I'm saying this from what I know. I watch the market all the time. I watch the financial news. Um, After you got January, February, March, there's the first quarter of 2023, right? After that first quarter, look for things to be happening. Things to be happening. Things are already happening now. Look around. In the last few years, what has happened? We had a pandemic, whether it was a pandemic or pandemic, whichever one it was, it happened. Um, we've had all these cities with this water trouble. Everybody's either the water's messed up or it's a lack of water. We got water mains freezing in the winter. We still hadn't made it fully through the winter yet. We still haven't made it yet. We still got January and February and possibly some of March to actually get snow, ice, and all of that type of stuff. Then we got to look at this right here. Did anybody know that the railroad was looking at going on strike?
mm-hmm. Mm-hmm.
How big would that be? They move 1/3 of everything in the United States. So if they go on strike, that's everything that moves on rail would not move on rail. Everything that moves on rail can't be moved on trucks. Some of it, like you got cattle, you got all this stuff that's moving on the water. I used to work for a company that we made everything that we're drinking and eating. I worked for a company that made all that stuff. And we made it from corn. And
Mm-hmm.
the corn came on barges on the Mississippi River. And we made corn syrup, fructose, fiber, feed, um, germ, anything to make animal food, the feed to feed the pigs that they're growing on farms. We made all of that stuff. And so I know how big that would be for food, for
Mm-hmm.
supplies, anything when you can't move it on the river. And guess what happens if they move it on truck? It's 5 times higher. So
Right.
if it's five times higher to move, what do I have to do to the prices for the consumer? I gotta take them up. I can't. I gotta make money. So only way I can make money, I gotta charge you more. And it's already too high for us right now. So if everything goes up any a little bit more now, people aren't gonna be able to afford it. So you got to look at what's going on, and I think we're going that way. Like the recession has been happening. A recession is when you have the GDP is down for 3 consecutive months.
Mm-hmm.
Once that happens, that's a recession. That's what causes a recession. Now, why aren't they talking about it a lot? Because I'm telling you, when March hits, after March, you're going to hear them talking about it all the time.
Yeah.
And people are not going to be prepared because they waiting for it to be talked about on the news to
Yeah.
actually do
Yeah.
something.
And we've been talking about this before. People have always saying we're heading into a recession. I'm like, we've been in a recession. It's been happening.
Yeah.
Time and again, we saw it last year, and then obviously with all the other stuff going on, like the war in Ukraine, inflation, gas, and all that. It's all relative. The last one of the last questions I just wanted to circle back. just to try to see if there's a connection here. Let's say, because the young lady was saying that she has whole life insurance
Mm-hmm.
policy.
Uh-huh.
Can you then get an ROP with a whole life?
You can get as many policies as you want. There's no limit.
Mm.
Did you know,
So,
did everybody know that? Did
so
everybody know?
whatever policy you get, you can also get the ROP.
Yeah, I like me personally, I have about 5 policies on myself. I have I have 2 term policies. I have a disability policy, meaning that if something happens and I'm injured that I can't work for, let's say, 2 years, this policy will pay my mortgage for 2 years. And they don't know if I need my mortgage paid. They're just going to send me the money. I can do whatever I want with it, right? And it's all tax free. It's not like they're going to send me to it and then I got to get taxes taken out. Or if I don't get taxes, when I file taxes, I got to file this. No, there's no taxes,
Man,
right?
I'll get a term policy today. If y'all don't get at least a term by today.
Everybody go look up this IRS code. It's IRS code 702. That's what allows insurance money to be tax free. Um, the last thing that you guys want to look into is annuities. Does anybody know what annuities are? Most people I don't know if they have this commercial where y'all live, but it's a commercial that most people know annuities. They don't know what it is and just know their slogan of that JG Wentworth need cash now
Hmm.
commercial. That's the only way people know about annuities. Oh yeah, they was talking about that on there. But what is annuity? I don't know. I don't have one, right? I don't have one. So annuities
Wentworth,
need
877 cash now.
that's it. That's it. So annuities are this. Annuities are meant to take whatever money you have from a 401k, from a pension. This is only if you do this. The lottery. You win the lottery. You can put that money into an annuity. Now, when you move money to an annuity, guess what happens? They don't tax anything. There's no fees, there's no taxes, none of that. You get to move that money without having to pay any penalties or taxes. When you move this money, annuities is meant to stretch your money to pay you for the rest of your life. And then after you pass away, it's meant to pay your offsprings or your husband or your wife or your family. And it's going to keep paying them. So if you want a big amount to be every month, like if you say, hey, I need $3,000 a month. I need $3,000. So you got to have enough to stretch it because it's not going to stretch a small amount and make you pay 3,000. It's going to only give you what you can afford to have every month to stretch for their time. So everybody with
Annuity.
401ks,
So is an annuity another policy essentially that you're paying
it's a,
each?
it's an insurance product. You
Okay.
only can get it through an insurance company. Like you can't go to your bank and say, "Hey, I want an annuity." They don't have it.
Okay. But if you have money in your 401k, you're saying that you can move that to an annuity
Mm-hmm.
and then that money can be taken out tax free.
Mm-hmm.
You
Mm-hmm.
can't do that with the 401k, right? You take money out of your 401k, you get taxed.
Yeah. Anytime you take money from a pension or a 401k, if it's that time for you to do it and it's possible, which 401k is 59 and a half
Mm,
without getting penalized. You can take it before that, but you'll get penalized and taxed. So we're talking 20 to 30%.
correct. Now, Purple is asking what's better, annuity or a Roth?
Annuity. I'm gonna tell
Ooh,
you why. I'm gonna tell you why. Annuity is safe from any losses. Anything dealing with insurance takes zero losses. And you can say, well, how is that? Think about it. What's the oldest industry in the world? Anybody know? I want to give out a cash prize. Anybody know what's the oldest industry in the world? The oldest. Anybody got it? Anybody
mining,
got it? Huh?
mining.
Insurance.
I'm all
Insurance.
mining.
Insurance.
Gold rush.
Anybody can guess what year insurance started, or even what decade or what century insurance started in.
He said hoeing. I'm dead. Paper chaser, I'm over you.
It came right after insurance. That's why they started getting insurance.
Oh,
Some of y'all are close. Some of y'all are way off. So the first life insurance policy, was sold in 1702.
mm-hmm.
1702. So if you think about any of these rich families, the Belts family, the
Butler.
Rothschilds, the Rockefellers, they used insurance to keep the money within the family and to constantly pass down. Like the next generation didn't have a choice of doing it. They set it up. Just I'm gonna give y'all a scenario and y'all can just marinate with this. Okay, I got all these policies. Let's say right now, me personally, if I passed away, my life insurance and all of my policies would pay out, let's say $1 million. My family would get $1 million. Instead of me having it go straight to them, guess what? I have that $1 million going to an annuity automatically, even though I'm passed away. I set that up already. Now it's going to an annuity, right? Now, half of it is going to the trust that I have set up. I have only thing I have under the wheel is stuff, tangible things that are assets, like certain cars that might be an antique that goes to my son. The house that's going to my other son. I got all these things. That's what I'm doing with the wheel. That's it. The trust, that's the family businesses. If I have two or three businesses, all of that is under the trust. And I'm dumping money into it, right? And then the annuity gets half of that $1 million. So $500,000, 500,000 goes into an annuity. That annuity pays my family a monthly income off that 500,000. And the businesses are making money, and there's a
Hold on, your mic went out. I don't know why. Nope. What?
Can you hear me now?
Yes. Okay. You
You
left
can't hear
on
me?
Yes, you left on the businesses are continuing to build. Can you hear me? Moneyconnoisseurs just
Yeah,
getting
it's like it's delaying now. It's
okay.
delaying.
Okay.
Okay. I think
Got it.
we're on track.
Yes. I think you might be lagging a bit. I don't know why.
Okay. Yeah. It's like every time you say something, it's saying it like a few seconds after you say it.
Okay, so keep going. You mentioned the will, which is tangible, the trust, which you would put the family business under as the family business continues to thrive. And then the annuity is the money that you're putting in there so that they can get a monthly income after you pass.
Right. Because some of us, have family members that we don't trust with $800,000. Right. So
A lot of
that
us.
annuity, that annuity helps you with that. It only gives them a certain amount a month that they can
And
use, and it still be a good amount.
that annuity, once you set that up, that check would be coming every month. So it's not something you have to think about as far as, oh, I got to take out this amount. It's something that comes to you every month.
Right. Based on the amount that you put in the actual life expectancy of your if you're male or if you're female, that's what it's gonna stretch you to.
Y'all, this is gold, man. Please tap the screen, follow me, follow Money Connoisseur. I definitely want to have more discussions about this with you because this is so important. I'm still trying to figure it out myself. And I mean, I need to get this done now. This is a New Year's resolution for me. I want to will, I want to trust, I want to get my annuities set up because I do have a 401k here with my job. I want to flood that money into my 401k. I do have somewhat of a retirement plan with what is it called? Fidelity. Again, that money's going to get switched over to an annuity. Now
Do
that
annuities earn interest? Of course they earn interest more than your bank account.
what was that? What owns annuities?
Annuities,
Ooh, and they earn interest.
and they invest your annuity. So with the permanent policy, write this down. A permanent policy, the product is called the IUL. That's Index Universal Life Policy.
And that's with a premium life policy. You get a IUL.
IUL, that's a permanent policy. That's the
Okay.
one that lasts 121 years.
Okay.
And guess what? Guess what? That whatever you're paying a month, it can stop at a certain age and you have the policy for the rest of your life and you never pay again. It can be set up like that. So think about you getting it for your kids. You can say, hey, at 18, I want this $300,000 permanent policy to be paid for, and my child doesn't have to pay after age 18. I pay for it up to 18. After that, here, son, you got a policy that's $320,000, and you don't have to pay for it no more. So guess what that child can do? They're working or whatever they're doing to get money. They can take money and dump it into the policy because they don't have to pay every month no more. They can actually use it as a bank.
Mm, mm, mm.
Yep.
Money connoisseur. I wish I had a. Hold on. Let me. I need to. I need to. Hold on here. Yeah, this information is.
Yes, 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 yes. This is how you do
Give
it.
it up for money connoisseur.
Thank you, Renee,
Money
for the time. I
connoisseur.
just love educating. I love educating.
Y'all, this is so valuable. Like, okay, it's not mirrored. So what does that say? Because it's backwards. It says 1 million a year.
Oh, oh.
Oh, you're welcome, guys. You're welcome. Thank you so much. Go ahead and tap the screen. Tell us how much you like this information. Money connoisseur. It says 1 million a year, 83,333 a month, and 19,230.
Write these numbers down.
Oh, she said write them down, y'all. Listen, my notebook is out. Don't
That's
tempt.
what you need to make $1 million a year. Figure out how to make that a day, make that a week, make that a month, and then you got $1 million a year.
Wait, I thought oh, okay, no, you're right. That's 100,000.
Yeah.
Love that. The last one was $2,739 a day to make 1 million a year. Now, if you make $350 a day, that's 100,000 a year. That I
There
knew.
you go. Look at you. Look at you with them numbers.
That I know. $350 a day can make you six figures. So we don't think about it, but that's all it takes. All right.
Yep. So y'all go ahead. It's on my TikTok page. There are multiple videos of how to do infinite banking and how to take that permanent policy and turn it into your own bank and use the money for whether it be investments or pay off your house or buy a Airbnb condo or whatever.
Money is not the most important thing in life. It's what money can provide. And that's why we need the money. Money is
Mm-hmm.
always usually the factor when it comes to being able to provide. And when we talk about Black and Brown communities, we talk about the lack of being able to provide. What legacy can we leave for our families instead of putting them in debt when we're gone and continuing the cycle? We could be utilizing these financial tools to set ourselves up and our families up for a better future. It's a tool.
It all is a tool.
It's a tool.
Makes the job a lot easier.
We
Makes
invest
life
our
a lot
money, we
easier.
put our money into things that don't make sense. They don't make dollars, they don't make cents, they don't make pennies, they don't make anything for us because our focus is on the wrong stuff, guys.
Somebody said, what does IUL mean again, please? IUL means Index Universal Life. So it's a universal life policy with an index type of investment. So your I'll tell you real quick what that is. So like when you take your money to a savings account at the bank, they give you interest, right? So what this policy does, instead of giving you the interest that is occurring while your money's in there, it's actually taking the interest, investing into the stock market, which is the S&P 500. That's what it's investing into. But it's only investing when the market is going up. It doesn't invest when the market go down. You can't lose. But every gain that you get, you keep that gain, and the interest on your money is higher because you have more money in here now because you won that basically bet or whatever on the market. So that happens over and over and over and over. And you can't lose something you don't have. The interest is not something that you go in there with. They give it to you. Instead of giving it to you, they invest it.
She
That's
goes,
just how it's set up.
she says, I'm a minority, but I find my family only focus is money. Well, why do you think that is? If you when you don't have money, the focus is going to be money. Why? Because that's money can provide. If
Mm-hmm.
I'm a minority and I'm busting my ass every day because I need that check, you know what I'm saying? What are you doing with that check? You know?
How many families on here have had someone pass away and money wasn't the topic of conversation?
Right. And that be the argument at the funeral. Who's
Right.
what? You know, now you got auntie climbing in the casket because she's sick, knowing she got to help cover half this stuff, you
Crying
know?
twice.
Right.
Crying twice.
You know, and then once it's all done, now your family's in debt because of your loss.
Yep.
When all this stuff could have been taken care of. He says sheepishly raises hand. Yes.
I'm pretty sure all of us, most of us have. That's been a conversation when someone passed away. We're talking about money. We're
Mm-hmm.
not grieving. We're talking about money.
He
Then
said,
we talk about
just
mental
had to
health.
carry both parents off GoFundMe. It shouldn't be that way. And we can't expect our parents to know what we don't know or what they didn't know, what they weren't taught. So it's like if we have the opportunity to do this for ourselves and then teach our parents, what do you say, y'all? Y'all can get a policy as old as 85 years old. You can get a policy at that age, 85.
Yep.
So if we have the information to help our families out, why aren't you helping your mama, your auntie, your mom, your dad, anybody, your relatives in any way set that up to help you, your grandkid, their grandkids, you know? My parents had planned far ahead so my siblings and I do not have to worry about money and death. That's how it should be.
Yep.
Okay, so one of the questions I'm seeing is where can I get a policy?
Countless amounts of carriers. I actually have, since that's why I'm a broker. I actually have 400 different carriers that have access to all of their products.
All right. So again, you guys, you can go on Instagram and follow Money Connoisseur at Money Connoisseur _ You can also follow him here on TikTok, Money Connoisseur. DM him, hit him up on Instagram. You can also follow him. He mentioned Black Wealth, Black Economics. That's his Facebook page. He's also as Money Connoisseur on Facebook as well. He has tons of tips on here. You guys can contact him as far as where to get your policy. We've talked about all of the options you have at this point to figure out what policies are going to work best for you. This information is extremely valuable, Money Connoisseur. I thank you so much for just hanging out and talking to the community because we need to hear this stuff. We need to have more conversations about this stuff. I know some of the
Yes, definitely.
out is fun and stuff, but I think I would really like to have you on here again, just in the next few weeks, just to kind of tell people again for the new people who might be coming in here or have never been here before, because this information is important. And the better we set up our communities, the better our future will be in this world. You
Cut
feel me?
the claps on again for yourself. Cut the claps
Hold on,
on.
hold on, hold on,
Cut
hold
the
on.
claps on. Yeah, everybody, tell Renee thank you for caring enough to do this on her page. Like, yeah, y'all got to understand what that does. Group economics, man. That's what we're doing.
Okay, if y'all took econ, I wish they taught this in econ. What was the stuff they were showing us in econ? That was, man.
No, they're never gonna teach this in school. So you got to learn it so you can teach your kids because they're not gonna teach your kids this.
No, no. And again,
College not going to do it. Even though they pay $100,000 for college, they're still not going to learn this. The basic things about money. And it's good that all of us are on here, because what this stuff does when you educate yourself about finances, it changes your money blueprint. It
mhm.
changes the way you think about money, which changes the way you move about money. If you want serious money, you have to get serious about your money.
Eddie asks, my parents set up a trust for me and my siblings. Would it be better to move to an annuity?
Yeah, I mean, you can keep the trust. You can keep the trust. If y'all have some available funds, you can create your own annuity. An agent can actually create an annuity for you.
So let's say you have a trust that has, you know, $500,000 in it for you and your siblings. If you wanted to
Mm-hmm.
take 100,000 out of that and place it into an annuity, you could, and
Yeah,
continue let the rest of the 300,000 build up as the business continues, or just, you know,
exactly.
or
Without losing anything, making that transfer.
both you can.
Yep, without losing anything to make that transfer.
Any ideas on investments for pension?
Yeah, annuities.
Annuity. Yeah, we just talked about that annuity.
Annuities.
You have a
Uh,
401k or a pension, move. He's saying Money Connoisseur is advising, because I know this information ain't free. The man still has a business to run. He ain't giving us all his tips. But if you have a pension or a 401k, by moving it into an annuity, you can then use that money tax free. If you take money out of your pension or 401k, you're going to get taxed among other things for taking that money out, especially before, because those have terms, right? And if you're taking it out before a certain time, you're going to get taxed.
but no, no, no.
No.
This is, you don't have that red tape.
Mm.
You don't have that red tape. This is why it's so good. Um, the IUL, the Index Universal Life Permanent Policy that lasts 121 years, that's how the rich stay away from taxes. That's how Donald Trump actually pays $759 in taxes and makes billions. He takes the money that he makes from hotel, retail, stocks, casinos, real estate, all of this money that he makes, he takes money and puts it inside of multiple policies that he has. And now he can take that money out of the policy and use it tax free. He's filtering. It's almost like cleaning money through insurance.
Ooh. So the trust becomes available to me at 60. What are the tax ramifications of moving it to an annuity?
Zero for moving it. Zero.
So
It's
yeah, if
zero.
Donald Trump is getting money from this business or this move and that move, he's probably putting it in his premium, which then has the IUL, right? So some of that money is going into the market, which helps it grow, which is also building up his policy. And then he puts probably some of that money into a trust where all his kids, right, he has his will, which is what Money Connoisseur said, more of his tangible items. So Mar-a-Lago is going to go to this person and that person or whatever.
Mm-hmm.
He has the other money going into an annuity, so now he's probably paying himself however many hundreds of $1,000s a year tax free, because all the taxable money that he's putting into these trusts are being filtered in and it's being cleaned, and he can use that however he wants. And he spends how much in taxes? $750.
Yep.
All right.
And so anything that's left over that could be taxed, that's when he files bankruptcy. Just saying, that's how they do it.
Yeah. Wow. Oh, I feel accomplished. I have the notes. I'm going to take this home and go over all this stuff. And like I said, Money Connoisseur, I'll be getting in contact with you soon about
Definitely.
start setting up policies.
Oh
If
yeah, YouTube too. Y'all can go to YouTube. I have a page on YouTube, Money Connoisseur on YouTube. I got a couple of podcasts that I've done for different people I know that have their own podcasts. So yeah, y'all can check those out. Some information on those.
yes, I love that. I love
My
that.
quotes are free too. If you hit me up and you want to get a quote, I don't charge people for information and I
Mm,
don't charge for quotes.
okay, y'all hear that? This is your opportunity. You really don't have any excuses with Money
I'm
Connoisseur.
trying to eliminate the excuses because I'm really trying to help our people. So I'm trying to eliminate any excuses to why people are not getting this stuff. And if you ever go into an agent's office or whatever and they try to charge you for that, don't do it. Don't do it because they're not doing anything. It's nothing to charge. And if you're thinking like, oh, I got to get paid, I can get the policy on the day I get paid. No, you don't. We actually can set the dates up for whatever dates of the month you want to do it. And it doesn't have to be monthly. If you think that you can pay it yearly, then you can pay it yearly. That way you don't have to look at it again to the next year.
Mm.
It's flexible. This stuff is flexible and it was made for our wonderful people, but we don't take advantage of it.
We got Avanta on our side, y'all. He's not charging for consultation. You have multiple platforms to get in touch with him on: YouTube, Instagram, TikTok, Facebook. He's given us
Spencer
every.
said, are we in a recession? Of course, Spencer. We're in a recession. We've been in
Yes.
a recession.
He said consecutively for 3 months, if GDP is higher than what?
If it's down,
If it's if GDP is down consecutively for 3 months, we in a re.
yep. And the GDP is basically the money that we make from trading supplies and stuff from other countries. If China is not giving us what they normally give us, and their stuff is down for 3 consecutive months, that's when you have a recession.
So Eddie, this would be a good thing to collab with your partners. Maybe kick back some a little, a little fee for Money Connoisseur, and he can teach a class, or at least give your athletes the same options that he gave us, because again, they're still in college. They got time to
Mm-hmm.
policies. They have time to have low cost policies. They have the time. And so, and like you said, with them being pro athletes at some point, or even just handling their finances as college kids now, because they can get paid, they can get sponsored. Where's that money going to go? What are they going to do with that money? They're just going to waste it. They're going to spend it. Some of it's going to go to education, supplies, but where can they be investing the money that they're earning at that age? And
Right.
so this,
Spencer said, how long do you think it will last? He's talking about the recession. For some people, it won't ever end.
yeah, I was going to say that's relative.
Yeah.
Very good. Well, Money Connoisseur, thank you so much again
Thank
for
you, Renee.
blessing my live. I couldn't have picked a better first guest to have on my live, because honestly, this is so important. It's good to put a face to a name, and yeah, I will be talking with you shortly, and hopefully, everybody here who's listening, if you have gotten all of his information, you guys can DM him again, follow him. Schedule any one-on-ones. Consultations with Money Connoisseur is free. So there's no better time than now.
And I'm licensed in every state, so I can actually do business with anybody, including Puerto Rico.
Puerto Rico's in the US, so let's do that. You're welcome, everybody. Any last words, Money Connoisseur, before I kick you out? No, I'm just kidding. Before.
Now, just everybody don't take this information and put it on the back seat of your car. Actually do something with it, because like I said, if you want serious money and you want a better life, you have to do something different. You have to do something you haven't done before.